Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It is June 22nd, and you know what's next? The charts. So we're currently trading at 103.13 this morning. This is only 4 cents different than my last report here on last Thursday. So really not a lot of movement. We're looking at support coming in below us. 103, that's kind of a weak support. And then we got 102.80, which should be a pretty strong support for us. Resistance is up above us at about 103.40. And so here's the reports. Jobless claims slightly helped bonds, nothing too crazy. It really wasn't too far off from the consensus. Leading indicators, FHFA housing, really no major news on those. There is talk about Yellen, though. Her term's coming to end. White House is possibly going to begin vetting a new Fed chairman, and so we'll kind of see what happens with that. That's probably not going to be till fall, and there's talk that she may actually extend through the term. As you know, Yellen. She's the one who plays a major role in determining the short-term rate. And so the short-term rate is a big mover for bond market because it impacts inflation and economic growth. So it's something that you want to put on your radar. If they do get someone in there besides Yellen, a lot of these the vetting is actually not very transparent. So we're not going to really know a lot about it. But later on in the year, likely, or early next year when it comes out, it could be a major market mover depending on who they pick. Okay, so kind of interesting stuff going on there. To kind of quantify where we're at, bonds averaged about 102.85 last month. We're currently trading at a 103.13. That's 28 cents better. So Freddie Mac reported that the average consumer in May was getting a 4.01 rate and paid a half a point to get there. So if we're trading 28 cents better, you know what? It's a little bit better than May as far as the points for the same rate. So not really worth writing home about. If you're getting a $100,000 loan, a quarter of a point is only $250. So we're not really seeing anything crazy on the market, but let's get to the forecast. So my last projection was a hit. It hit right in the middle of my projection, so I'd like to see that. That means I'm giving you guys some good news here. The analysts were pretty inconsistent on the short. They were a little bit neutral and bearish, and they were also inconsistent on the long, kind of neutral and bearish. But the key thing we're seeing here is they're not bullish. They're both not bullish. Okay, they're neutral to bearish. So that means that in the short term and long term, they really don't see the market they don't forecast the market getting a whole lot better, and I'm going to jump on that bandwagon. I'm going to forecast that the bond range is going to be between 102.80 and 103.20. So 103.20 is only 7 cents better than where we're at right now, but 102.80 is 33 cents worse than where we're at right now. So we're kind of on the top end of this little trading channel, and I think we have a lot more room to get worse than get better. So I would say, if you're floating right now, definitely be careful. I don't want to tell you what to do, but I do think that you have more room for your rate fee situation to get worse than you do for it to get better. At least that's the outlook for now. Okay, guys, that's it. If you don't mind, would love to hear from you. Leave those comments down below. Hit that like button. And if you want to get updates when we release the new videos, which is generally about every Thursday, you can click on the guy on the top left. That will take you to the subscribe. And if the bond charts and none of this really made sense to you, it's okay. Really cool video on your top right. That's going to be Mortgage Bonds 101, and it'll teach you the basics that you need to know when you're trying to pick a time to lock in your loan. Anyway, that's it for now. We'll see you next Thursday. Bye, guys.